Welcome to the Clear Diagnostics Tax CPA Success Show, where we share updates on current tax law, operational stories from the tax practice of our virtual CFO firm, and anything else tax related that comes from being a leading distributed virtual CFO firm. If you're a CPA in tax practice who wants to learn strategies to minimize taxes for your clients, then this podcast is for you.
So welcome to the Clear Diagnostic Tax Podcast. I'm Tom Wadelton. I'm one of the virtual CFOs at Summit CPA Group. I'm joined by Dave Danic, our tax director. Dave, welcome to our podcast.
Tom, thanks for having me on my podcast.
Yes.
I appreciate it.
So last time you told us it would never change, but the Build Back Better plan is like totally on target. And now we're saying, hey, things have changed from that. And let's talk about one of the impacts of that maybe being delayed, and we'll talk a little bit about Roths.
Here's the dirty little secret of tax, planning, and we can only work with the information we have. So last week or 2 weeks ago, we did a podcast on let's cover what's going on with the Build Back Better plan.
Yep.
Supposed to be signed by December 26th or some day, and like talking to our clients about what they should be doing before year end, before this is signed to take advantage.
Yep.
And then President Biden yesterday says, Congress, you're not getting along well. So we're going to delay Build Back Better, most likely to 2022. So what we're saying is like we can talk with our clients all day long with only the information that we have. And that's what's been so frustrating over the past 3 years is you get all these tax bills at the last minute that you don't know if they're going to sign. And then when they do sign it, it's like really late in the year. So I can say, I think you should accelerate some income into this year, assuming they sign the bill. So now we have some clients that said, well, I pushed some income into this year and now, well, the tax bill isn't going to come through.
Right.
So there you go. So we're working on
some guidance we can give clients, right? We can't say, hey, black and white, I know exactly what's going to happen. But given what we're seeing, there is some advice that we can give to people. Yeah.
Well, yeah, exactly. I mean, with the best information available 10 years ago, I didn't think Bitcoin was a good investment and I made an educated decision. Well, that turned out to be wrong. So what can we do?
Maybe long term. Maybe long term.
Maybe long term.
Maybe a crash coming.
So one of the big things that we've been working with our financial advisors and our business owner clients is something called the BackDoor Roth IRA. And that was one of the provisions that was going to be knocked out through Build Back Better. And it's a nice little strategy. So, and it's a loophole. Let's call it for what it is, right? It's a legal loophole, but it's still a loophole.
Okay. Yeah.
Why walk through the back door if I can walk through the front door? So just the theory is that if I make too much money, I'm eliminated from contributing to a Roth IRA. And a lot of our business owner clients fall into that category. And why do I want to do a Roth IRA? Well, the benefit of it is I'm putting after-tax money into it, and it's growing tax-free still. It's not subject to required minimum distributions when I reach the age, and when I pull the money out, it's not taxable either. So it's a really nice benefit. But that's why the IRS says we're not going to let high-income people do it. But if I go through the back door, I make a contribution to a non-deductible IRA, and then I immediately convert that IRA balance to a Roth IRA, which is allowed. It's just some jumping through hoops, but it allows me to get a balance of after-tax funds into this Roth IRA that's growing tax-free. It's a really nice benefit and a great way to diversify your pre-tax and post-tax retirement income.
Okay. So essentially the conversion of a normal IRA to a Roth IRA doesn't have the sort of income provision that would stop someone if that's the back door that you can do, right?
That's the back door.
Fund it one way, switch it over. Okay.
Yeah. So there's certainly some things that we want to talk about
to do. Yeah.
Well, it can be. I mean, I'd certainly recommend working with like a financial advisor to like have the accounts open for you. But the reason I'm harping on this right now, or I think why we want to talk about it, is saying clients, do your backdoor Roth for 2021 before the end of this year. That's good stuff. So we get the
Mm-hmm.
benefit still allowed. Now, and then I also recommend you do the backdoor Roth early in 2022 for the 2022 tax year. The reason I think there's a little bit of hustle here is what happens if Build Back Better gets signed in early February of 2022 and they shut the back door.
Yep.
Well, they can maybe say we can't do it effective 1/1 of 23, or they could say, hey, you can't do it effective February 8th whenever this is signed into law. So I would say I
Yeah.
don't think they would reach back and hurt people for the work that they did in 2022.
Okay.
So do it in December and do it in January.
So definitely a window, and to get 2 years worth, right? I mean, you have
Yeah,
time
that's
here
right.
before the end of 2021 to put it in, and if you move quickly in 2022, and that can be money that you're happy is now sitting in a tax-free, growing, and as you pull it back out,
That's
kind of
right.
account.
Yeah, yeah,
Okay.
yeah, yeah. And there's one area where, you hear a lot about this on the news, CNN, Fox News, whatever. They talk about this loophole that's an easy one to close. And while we talk in practice of it being pretty easy to do, there are some pitfalls that I think we have to let our audience know about. And one of them
Mm-hmm.
is the pro rata rule. So
Okay.
what this rule means is that if I have existing traditional IRA balances,
Mm-hmm.
I am not if I convert some of it to a Roth IRA, what happens? Well, my pre-tax contributions, I need to pay tax on it this year. So for
Mm-hmm.
instance, if I take $100,000 of a pre-tax IRA, convert it to a Roth, I pay tax on $100,000 of income. That makes sense, right? I
Yeah.
got the tax deduction of
Yep.
$100,000 in previous years. So if I wanted to do a backdoor Roth IRA today and I had an existing balance in all of my IRAs, all of my pre-tax IRAs, if I took my $6,000 contribution this year and then converted it to a Roth, I would have to prorate my balance of my pre-tax dollars and then pay tax on that. So I might be paying tax on $5,500 of the money that went to the Roth instead of zero from my IRA balances. So the way to get around that is to make sure you get your pre-tax traditional IRA balances out of those IRAs prior to doing the backdoor Roth IRA strategy. So my pre-tax balances are zero in my IRAs. So I've had some clients do this, say, hey, by the way, I did a backdoor Roth. I said, how much is in your IRA at the end of the year? What IRA? All of your IRAs. I'm like, oh, 50 grand. I'm like, oh no, you're gonna have to pay some tax on that conversion. So
Oh,
so
okay.
it's always good to get all of your simple IRAs, SEP IRAs, traditional IRAs, and make sure you have those balances. So
Okay. Okay. So
yeah,
just understand that. So to your person that had the $100,000 in the IRA, if they say this sounds cool, I want to put $6,000 in, they have to consider that $100,000 that's sitting there. Is
absolutely.
that right?
Yep.
In a
Yep, for
normal
sure.
IRA. Okay.
Yeah. That's why I
Okay.
always ask who's your financial advisor? People have
Mm-hmm.
busy lives. If they've been in a career for 20, 30, 40 years, you just have different retirement accounts floating around. Right? I mean, we were talking with one of
Yeah.
our CFO clients the other day. We were talking about some
Mm-hmm.
conversions. He's like, He's thinking, what accounts do I have to get statements for, and where are they, and
Yes.
and, and who are
Right.
they
Yeah.
housed by? So yeah, certainly something to.
Yeah. I'm
That's
remembering
just
him
one
for each
pitfall
tax
here.
year, right? And he'll
hmm
sometimes ask us which accounts he has and things like that. And it's very natural for people, but for many, especially wealthy or not, that simple to just say what's your balance when they've got all over the place.
Yeah, yeah. And
Okay.
what type of account is it too? Is it a
Yeah.
Roth IRA, a traditional IRA, a SEP?
Yep.
So things to
Okay.
consider.
So
Yeah.
if you're the tax person working with you and their financial planner, are both
Mm-hmm.
things that are important to do this. So you're not
Absolutely.
surprised by a tax bill that says, hey, I did something really cool, and then all of a sudden, oops, I made a mistake and now I owe a check that I didn't
Yep.
expect to for things. Okay.
So, yeah.
So for anyone, if it was a person out there that you're guiding a client who's heard about these backdoors,
Mm-hmm.
likes the idea of Roth, makes too much money, things like that, time is really of the essence now. If you think that this Build Back Better plan is going to go through some time,
Yeah.
make
Yeah.
a move
It's just,
before you find out it's
yeah,
closed.
we were telling people to do it already in 2021 before they closed it.
Yep.
Now it's like if it's going to push into early 2022, you can do a Roth IRA, backdoor Roth IRA in January or
Mm-hmm.
December. Might as well just front load it into January to make sure that we're being as safe as possible to take advantage of the benefit. And that's what
Makes a lot of
financial
sense.
planning's all about. And
My
tax
guess,
strategy is little bit here, little bit there. You know, if
yeah,
everyone just had a strategy to say, I'm going to eliminate $100,000 of taxes, everyone would do it. No, it's just taking little strategies and piecing them together to build wealth and save tax dollars.
yeah. But the 10 years from now, when that 6,000 is
Yeah.
$15,000 and you can pull it out and it's not
Yeah.
taxable, that's a really nice opportunity.
Yeah, and if you're married, you can do husband and wife, spouse and spouse can each do it
Mm-hmm.
for sure. So
Okay, good to maximize that. Good tip.
Mhm.
Yeah, that's helpful.
Yeah,
As we think of
yeah.
things
So
getting delayed, that's a really nice one that's in there.
yes, yeah, certainly something to look at. And we're gonna, we're sick of reading these updates on Build Back Better in the tax
Sure.
department, but that is our job. We're ready for Congress to give us certainty for our clients, but this is one area
Yeah.
where I think we have some momentum to provide some action. So that's good.
Yeah, sounds like a good suggestion for people.
Hmm.
Good. Well, thank you. Seems like a really good topic. Any
Yeah,
final
yeah.
thoughts on this?
No, we're just going to keep reviewing what we need to advise our clients when it comes to changes in
Mm-hmm.
tax law, and hopefully the IRS can catch up. Be good.
We will hope so.
Yeah.
Good.
Yeah.
Thanks, Dave.
Yeah, Tom, thanks again, and we will talk to everyone later.
Sounds great.
Enjoy this podcast? Visit our website at summitcpa.net to get more tips and strategies for achieving tax success. We're here to be a resource for you.